Good morning, good afternoon, and good evening, folks, depending on your time frames and your location, wherever you're based. I am based in London, so good afternoon from myself. First things first, if you guys can hear me loud and clear, and you can also see my screen, please do give me a sound check and also screen check by saying yes or no. Thank you, Amutha, and I hope you are well, especially in this difficult time. Thank you, Manhol. So wishing you a pleasant day, and I'm hoping that you are doing well in your trading, and to everyone else, because these are extremely uncertain times. Although the US non-farm payroll data, where our particular focus is going to be all day today in this particular webinar, but there are events which are actually a lot more important and which have overtaken the entire sentiment. And of course, I am referring to the Ukraine and Russian situation, the war which is going on in Ukraine in this 21st century. Completely bizarre to say that, but unfortunately the events are unfolding over there, purely because of politics, and people are suffering for that very unfortunate situation. The market, obviously, on the back of that is highly sensitive. Every single headline in relation to war, every single headline in relation to sanctions is very much bringing mammoth moves in the market. Every single day, pretty much, we are seeing big swings in the market. Stock futures changing their directions completely, erasing their losses, erasing their gains, and then switching their direction a few times a day. And for the time being, market is just not clear which way it is going to really go, and there's so much uncertainty among investors and of course traders in relation to the markets. People are just not sure which way the markets is really going to go from here, and the reality is that no one really knows, because this is a completely different situation like we had the 1-2 years ago with COVID. Obviously, COVID was a very much of a global situation. This is more of a not that much of a global situation, because we're not seeing the world coming to an end. Or, well, there's always a possibility of that if it goes to nuclear war or anything like that. Who knows what can happen? But so far, it is mainly about Russia, Ukraine, and the market is reacting on the back of that because of the consequences that can occur for the global economy, for the energy market as well. Well, we will cover a bit of that, but the focus is going to remain on the US non-farm payroll data and another important piece of information which will be coming out in 12 minutes from now onwards. We will be covering. Before we do anything else, as always, it is important for me to go through this disclaimer and these warnings, which are right in front of you. If you do have any questions, please feel free to contact your own account managers. Will be more than happy to answer them. For our contact details for our Twitter and YouTube, they are right in front of you. Just to let you know, the recording of this particular webinar will be available on our YouTube channel. Something for you guys to look at the recording afterwards for sure if you have any questions. Now, here is the agenda for today. We'll be going through some of these study questions. Many of you are already familiar with some of them, and we are not going to devote too much time into that, because I wanted to relate the US non-farm payroll with the current situation, what is happening. But of course, we wanted to talk about the opportunities in here. So, importance of US non-farm payroll. The first question always is the most important one. What is the US non-farm payroll data? Can anyone help me with in relation to that? Because obviously we don't want to spend too much time on the first two questions today, because we have quite a lot to cover. So anyone who has an idea what is US non-farm payroll data, now is the time to answer. And remember, for those of you who already know what it is, this is your opportunity to have that in your mind and then making sure that you clearly understand that. So by writing it down, by saying it out loud, it really emphasizes the importance of those important economic events. So thank you for so many of you who have replied. So they're saying the US non-farm payroll data is about the employment number over in the United States. And another comment coming over here, it says that this is about the US employment market, which is quite important for the Federal Reserve. Well said on that particular comment, because the central bank in the United States, which is known as the Federal Reserve, watches this particular number very, very closely, and they base their monetary policy on this particular one. Now, given the fact that we are seeing inflation in the US market going to the upside, so there's no doubt about that, that the inflation has been on the rise, and then economic data at the same time has also shown a lot of improvement in relation to that, or at least the trend in relation to that is to the upside. So both of these two factors over here are very much pushing the Federal Reserve to change their current monetary policy and shift their interest rate or their monetary policy as response to that. So interest rate is very much the focus for this particular month. And later on today, we do have a speech from some of the Federal Reserve members as well who will be talking about that. So that is also going to be an important ingredient in terms of the Forex market, in terms of the equity markets, and of course commodities. And by that I mean gold market for sure. So usually speaking, when this particular number comes out, which comes out on the first Friday of every month, the market waits. The media is very much focused throughout the week for this particular number, and they have nothing else to talk about apart from that. But obviously that Russian situation has diverted their attention altogether, and everyone is talking about what is next in terms of a geopolitical tension, where this particular relationship is going to go from here. Are we going to see full attack, and what will be the consequences of that? And if Russia kind of gets in trouble with the NATO or will face NATO, because so far the US has made it very, very clear that it has no intention to get involved directly with Russia. So there's that clear message from Biden yesterday as well. So they just kind of wanted to provide all sort of other support, but just no direct conflict with Russia. So that is something that traders will continue to watch, and something which can really emphasize that is that if NATO, the US puts sanctions on Russian oil, then Russia will retaliate, and we could see the situation intensifying quite a lot from there onwards. So Russian oil is the most important one to really look at. The sanctions coming from the US over here is going to really sort of increase those tensions. Now, for the US non-farm payroll data, which is out on Friday and at 1:30 p.m., the Federal Reserve will be watching it, but they will not be paying too much attention to this one because of the Russian situation taking place. But nonetheless, this data is still going to bring quite a bit of a movement in the market. And the next important study question when it really comes to that is what makes the US NFP reading. So there are two important elements. So every Wednesday, the first Wednesday of every month before, especially the US non-farm payroll data, we get the private employment data numbers as well. So now this particular number over here sets the tone for the US non-farm payroll data. So if this one is going up and if this prints a pretty good reading, then what we are anticipating, what really happens then is that traders would expect the US non-farm payroll data to come on the good side as well. If the private employment number, which is going to be coming shortly at 1:15 p.m. in 5 minutes time, comes a lot more weaker, or it shows weakness in the private employment market, the market anticipation is that the total employment number which is going to be released on Friday, is also going to be weak. So the reaction is kind of, there's a correlation between them. Now the question, of course, there is if the correlation is strong enough or how big the influence is. But in generally speaking, the components of this one, which is your private employment data, certainly has a correlation with the employment data, and that correlation tends to be most of the time positive, meaning when the price moves to the upside, or sorry, when the data prints a stronger reading over here, we expect the number to be stronger over here, and then that is generally consensus in the market. Now, let's go in the live market and then see when that data is going to be coming out and what are the expectations in terms of the market players about that. So here we go. Today is the Wednesday the 2nd, and in terms of the economic calendar, it is full with events. Earlier today we had that OPEC meeting. So OPEC is only keeping its supply increase, only increasing the supply by 400,000 barrel, which is not really that much. But here is our focus over here, ADP number. It is coming at 1:15 p.m. and previously this number was very, very weak. It came at -301, meaning that actually we lost jobs rather than gaining any jobs. And this particular month, we are expecting the number to be 378,000. Now, as long as the actual number over here matches this number or comes higher than that one, that would mean that, you know what, the Federal Reserve is going to think that the employment market is pretty strong. So let's start increasing the interest rate, and that means the dollar is going to move to the upside. And at the same time, gold price, we would see some sort of a retracement at the same time as well. But remember, as I discussed with you guys earlier, it is not only this particular data which is of importance today, because obviously we had the OPEC meeting, but it is over here as well at 1500 when the Federal Chair Reserve Jerome Powell is going to testify. Over here we are also going to get a bit more commentary from the Federal Reserve, and of course Bullard, who is extremely bullish or hawkish person on the Federal Reserve Committee. So these three events are sort of going to bring quite a lot of volatility in the market when these will take place. Now, what instruments to really trade on the back of this one is the next study question. Now, if I bring my MT4 platform over here, and then in terms of an instrument, you know, obviously gold is something that we are all going to be looking at very, very closely. Now, gold prices have been surging for the last number of days, but obviously today the prices have started to come over here. We formed that peak in terms of a gold price, and then in our analysis on our YouTube video, we did talk about that the gold prices are forming sort of their peak, and now the chances are that from here we could potentially see the prices dropping to the downside, and that is pretty much what we've seen in terms of a market event, right close to what this 20-day simple moving average. Here is your 50, this is your 100, and this one over here is your 200-day simple moving average. So there's still quite a lot of room for gold prices to go to the downside. But overall, that gold is one of the market which is going to be which is going to see some sort of a decent volatility coming into this particular event. Let's move our resistance zone. Let's set up some sort of a zone, some sort of a price levels ahead of this particular data, because now we have less than 60 seconds for that number to come in. Now, in terms of a support, we will be looking at just at the bottom of that particular candle and over here. And then something else we will also be looking at would be your Dow Jones Industrial Average, Dow Jones 30. Again, this is going to be highly volatile when this particular number will come. So what we are really looking at in here is that the prices are moving, is really the low of this particular candle over here, which we saw earlier this week. Last week was, well, actually, to be very precise, on the 23rd of February, so 2 weeks ago, 10 days ago nearly. So that's the low that we are very much focused on over here. So here we go. I think the number is pretty much out now. Let's see what is the number. If we can get that feed up. They haven't released the number yet. It's still not out. Let me see if we can see the number, just refreshing the page. The Gazprom said to be in the process of paying dollar debt due March 7th. So still the number is not out yet. We are still waiting for that number to be released. It's supposed to be 13.15. And again, we're going to bring out that platform over here to show us the actual volatility going into the market on the back of this particular number for the S&P 500 and of course for the gold prices as well. We're going to go into like 15 or 30-minute time frame to see that, as you can see, that the number is still not out. The data is delayed for whatever reason, and we are waiting for that number to come. 378 is the expectations in terms of the number, and we still do not have any number released, and hence there is no movement in terms of the gold prices yet. This is quite an extraordinary situation that we don't have the number out still, because the number should be out. And I'm looking at so many different sources, so it's not just only this particular website which is not giving us, but let's continue to look at the gold price, because this is where we're going to get the clues whether the number is good, whether the number is bad. So far the data hasn't been released. I have no idea. It's over a minute, and then why the number isn't really out. It should be out. There you go. Companies added 475,000 jobs in February. The number is out. So this is 475,000 jobs were added. So that's the number out there, 475. Of course, the website hasn't updated it yet, but the CNBC is reporting that 475,000 is the number. Let's look at the reaction. Obviously, the data was a lot more better than the anticipation. Hence, we are seeing gold prices coming off their highs a little bit, not big much, because remember, a lot of momentum in the gold prices because of the risk of the rally that is overall taking. Let's look at US 30, the Dow Jones 30. What is going on with the Dow Jones 30? Again, this is moving to the downside, and the only reason that it is moving to the downside, they still haven't updated that. This is quite a strange for this particular website, but we know the number is that. So with this one, what we're looking at, the US 30 really is that the prices are moving to the downside, because this firms that particular stance that the Federal Reserve over in the United States will increase its interest rate. But at the same time, we do have that positive element with that the US economy is on a solid footing. If the economy continues to remain strong, that's a good sign, because then the Federal Reserve can actually increase the interest rate, and it's a valid point in terms of the Federal Reserve changing its monetary policy direction. I see a few questions being asked right now, so let me go and address them. Can't see anything. Oh, okay, so I don't know what happened there. It was a technical glitch, obviously. But here we are. Now, can you guys see this screen? Is all okay on your side, folks? Yeah, okay, great. So there you go. Anyways, this is not much movement really happened over here in terms of the price action, because, okay, thank you everyone for confirming. Okay, so again, to summarize, the number came out at 475,000 in terms of the employment number, and we saw gold prices earlier coming off a little bit of their highs. So if we go into the 15-minute time frame, we see that gold prices moving to the downside on the back of that. So similarly, so basically what has happened now is we have a confirmation that the US economy, the employment market in the US economy is really strong, right? So which is a good sign for the Federal Reserve. and it's an indication for them. They can go ahead, increase interest rate, but only now it's going to be modest interest rate hike, and I would believe it's going to be only 25 basis point, nothing more than that, given what the data is really suggesting. And remember, this is not confirmed, but we need to see an echo of this particular message, the 475,000 jobs, the big job number. We wanted to see that on the Friday's number as well. And if we see that, then this is the scenario which we are looking at in terms of the Federal Reserve. In terms of an instrument, overall, looking at the gold price, there is no doubt that gold prices are way overbought, because look at the daily time frame. Look at where the RSI is trading in terms of the daily time frame. It is trading near its overbought area, and then it has come off its area over here. Is from its resistance zone. So for me, if I am looking to go and then buy this particular gold price at the levels where it is trading, I would want it to wait for the price to come in between 1846 to 1854 sort of a price level, which is quite far from where the price is trading at now. Otherwise, I wanted to wait for the price to at least come into 1875 sort of a price level to all the way to that 1894. So this would be the kind of a good enough or goodish enough sort of an entry. Otherwise, we wanted to wait for the prices to really come into this particular area near its 50-day simple moving average, because the RSI is really telling us that the prices are way overbought. So the reaction, or this particular sell-off that we are seeing today, can actually intensify on Friday, and the price can actually come over here, giving us an opportunity for a rebound. And that rebound will be very much based on if the Russian situation over here continues to intensify more war, the war takes a more ugly shape. And in fact, what we could potentially see is that if the war takes more further ugly shape, we may not see the price breaking the lows of today or the lows of yesterday. We could just see a continuation of this one, and the price challenging its resistance once again. But overall, at the levels where the RSI is at, it is not indicating to us that the prices are cheap or it is a good time to buy, really, in terms of the markets. Now, obviously, in terms of the markets, the situation is quite different over here, because the RSI over here is trading close enough to that 30 mark, which is associated with this oversold level. So it was over here when the market was over here, and after that we did see a bounce, a decent enough bounce, but the market has given up most of its gains. Like you can see over here, it went all the way to here, and now it is challenging the lows of yesterday. So the question really now is that, are we going to break the lows of yesterday? Because if the price violates the lows of yesterday, which was already a violation of the previous day's lows, or challenging, pretty much bringing the lows of this particular candle in focus. So I think that the possibilities are the price is going to go and revisit this area and perhaps forming some sort of a double bottom. And from there onwards, we could see a momentum to the upside. If it forms a double bottom, that would be a great opportunity to really kind of get into the price. So between now and Friday, the price levels we wanted to look at is the lows of yesterday, the lows of the last week of this particular candle, and the low of this particular candle. So these are the three sort of price levels that you wanted to focus on, and then this is the best level in comparison to that, or in comparison to that. Now, if we switch the board and go into different instruments such as the Nasdaq, and see what exactly is going on in terms of the Nasdaq. So on the weekly time frame, what we see is that the price has tested its 200-week simple moving average. This week, the price has gone above the highs of last week, and it is trading quite above the lows of the last week. So this is indicating to us that the price momentum is positive so far, because the price is trading quite far from the lows of last week. So the price level that we need to focus on is the lows of last week. Are we going to have a retest of this particular point? If it's a retest, is it going to be a double bottom? If it forms a double bottom, then we are moving to the upside. That would give us a great opportunity to bag some bargain if we haven't already done that. Now, if the price violates this one, then we are really sort of going towards that 200 week simple moving average, this particular area around here to test that, and that means quite a bit of a room to go. The RSI over here is close enough to its oversold area of 30, but still not quite there, because over here, back during the COVID crisis peak, it dropped below that 30. Remember, this is the third weekly time frame over here, so price doesn't usually come all the way to here. It can just come close enough, but right now we have a low over here, we have a low over here. In terms of RSI, we are pretty much the same as well. There's no diversion, like we don't have a higher high and or anything like that. So this means that prices are likely to move to the downside on the daily time frame. If you look at the Dow Jones Industrial, the Nasdaq Industrial Average, what we see is that yes, the prices have moved from this particular area to the upside and then went all the way to here. But now we have started to see resistance forming over here. So between now and Friday, we will be looking at the lows of this particular candle, because the low of yesterday is already being challenged, and that means that prices are likely to move to the downside, and especially depend on what happens with geopolitical situation. If they test it and then fails to rebound, we are going into this area of support and possibly double bottom forming, and exactly the other scenarios what we have seen with the other prices in relation to that. Now, with respect to gold price, because I do wanted to look at gold price at the same time as well, and then so do you guys should be looking at. We've already talked about where the good levels are. So this is the level that we kind of wanted to buy here. We wanted to buy over here as well. Between now and Friday, look at the low of yesterday, look at the low of the day before yesterday. So this area really is the focus, could be a great opportunity to buy. So folks, this pretty much is what is going on. So something that I kind of wanted to leave you guys with, and then I want you guys to really think about that between now and until the end of this week or Friday, is that you watch the geopolitical situation more closely. That has more merit, that has more importance among investors and traders. Now, what you wanted to watch over there is, will there be sanctions on Russian oil? If it does, that means Russia is going to notch up its attack on Ukraine. And if that happens, then will NATO come in, and then will NATO get involved? If NATO gets involved, then we are talking about a full-blown war. Right now, it is only between the two countries, Russia and Ukraine, and it is still, the situation is a lot more contained to a larger extent. But if NATO gets involved in Ukraine, then we are looking at a very, very unfortunate situation, which no one wants to see, and that will have a huge consequences for the markets. But right now, that is not what the traders or investors are looking at. They're looking at the numbers, what we have. So in terms of the rate hike, the employment matters quite a lot. Have a look at the Federal Reserve speech or his testimony later on, and ignore all the comments from Bullard, because he is just a completely hawkish person, and likely to bring a lot of volatility. Means opportunities for the market, but nothing more than that. What are your views on the oil prices? Are the oil price creep increasing? I do not want to buy oil at the current price levels. It is way too high. I wanted to short it, and then I wanted to go short on this one. Not at current price levels, maybe a little bit more. I will just let it go a little bit more higher on the weekly time frame. But even if I wanted to short it, I wanted to short it based on the weekly candle. So let this weekly candle form whatever the price level it goes in. And then once the top is formed, I will put the stop loss on the high of this week candle and then short. The next week we get stopped out, we do the same thing as well. So it's a test and trial very much in relation to that. All right, folks, that's all what we got today. And thank you so much for attending the webinar as always, and we'll see you guys later on.